Argentina. For decades, that name has pretty much been a synonym for economic chaos, right? We're talking hyperinflation, sovereign default, the works. But what if? What if one of the world's most volatile economies is actually hiding a massive, maybe even a once-in-a-generation opportunity for investors? Okay, let's dive into this.
That's really the core question we're going to try and unpack here. We're looking at a high-stakes, super high-reward bet on the rebirth of Argentina's entire banking sector. It's a play that could deliver some incredible returns, or, it could just reinforce the country's reputation for risk. From an investor's point of view, this is a fascinating story unfolding in real time.
So, to even begin to understand the investment case, you first have to get your head around the sheer scale of the economic shift that's happened. Argentina has been put through what they're calling shock therapy, and the results have been nothing short of dramatic.
The speed of this turnaround is, well, it's the whole story. Just look at this. We're talking about inflation projected to go from a staggering 25% a month down to just 2% by August 2025. Now, sure, this shock therapy caused a pretty painful short-term contraction in the economy, but this rapid stabilization, this is the bedrock of the entire investment thesis. It's creating a completely new playing field for the country's banks.
Okay, so there's this crucial concept you gotta grasp here. It's called financial intermediation. Sounds a little fancy, but it's really just what banks are supposed to do. Take in deposits from savers and make loans to borrowers. Simple. But for years in Argentina, that system was completely broken. Banks weren't lending to people or businesses. They were essentially forced to just lend to the central bank. Now, that whole cycle is ending. A huge pool of money sitting on bank balance sheets is being unshackled, and it's getting ready to flow back into the real economy.
So, how does this massive economic shift build the optimistic side of the story? Well, the bull case for Argentinian banks is really being driven by three powerful tailwinds that have investors taking a very, very close look.
First up, after the pain comes the gain, right? The economy is projected to roar back with up to 5.5% GDP growth in 2025. And for banks, economic growth is like oxygen. It fuels demand for loans from both everyday people and big companies, and that directly drives their core business.
Now this slide, this is where things get really interesting, because it shows the sheer scale of the opportunity. Private credit in Argentina had collapsed to just 7% of GDP. That is an astonishingly low number. It means there's a massive, and I mean massive, runway for growth as lending just gets back to anything that looks remotely normal.
And it's not just about loan growth. Structurally, the whole system is improving. Capital controls are being unwound, which makes the entire business safer. There's a clear path being set up for dividend payments, which is absolutely critical if you're an international investor. And finally, you've got this wave of mergers creating bigger, stronger banks that are perfectly positioned to capture all this new growth.
Okay, I know what you're thinking. This all sounds incredibly promising, maybe a little too promising, which naturally leads every smart investor to ask the exact same question. So, what's the catch? Because with this kind of potential upside, there are always risks.
And that brings us to the other side of the coin, the bear case. You've got some significant near-term challenges and these long-standing risks that you absolutely have to understand before even thinking about putting $1 into this market.
The first big fear is a spike in loan defaults. And yeah, non-performing loans or NPLs, they are going up. But this isn't necessarily a new crisis. See, during hyperinflation, your debt was basically melting away in real terms, which made it super easy to pay back. Now that inflation is falling, that kind of implicit subsidy is gone. So an increase in defaults is actually a predictable and, according to the banks, a manageable part of this whole normalization process.
Beyond that, there are three core risks every investor just has to be willing to stomach. First, sovereign and political risk. Let's be honest, Argentina has a long and painful history of policy reversals. Second is currency risk. For anyone holding the US-listed shares, a falling peso can just wipe out your gains. And third, you've got execution risk. The two biggest banks just made huge acquisitions, and now they have to prove they can actually pull off the integration successfully.
So if you're willing to take on those risks, how do you actually invest? Well, for international investors, the opportunity is accessible through four main companies, and each one of them has publicly traded shares right here in the US.
The competitive landscape here has just been completely redrawn. Recent mega deals have created a new big two. That's Galicia and Macro. They're now these scaled-up domestic champions, and they're competing against the digital-savvy global giant, BBVA, and the smaller, more nimble Supervielle.
This table does a great job of highlighting the different investment profiles.
I mean, look at GGAL's higher NPL ratio. That's a direct result of absorbing HSBC as it goes for massive scale. BMA, on the other hand, shows really solid profitability and a very, very strong capital ratio to fund its expansion. Then you've got BBARR playing the digital leader, and SUVV is kind of the agile turnaround story. Each one offers a different way to bet on this recovery.
And this all brings us to the final piece of the puzzle. This is the core reason why long-term investors are so intrigued by this whole thing. It's called the re-rating thesis.
This quote from the source material just sums it up perfectly. This isn't just a bet on banks growing their earnings. It's a leveraged bet on the success of the entire country's economic transformation.
So what is the re-rating thesis? Here's the core idea. Argentinian bank stocks are cheap for a reason. There's that infamous country risk premium baked into the price. The thesis argues that if these reforms actually stick and the economy stabilizes, that risk premium is going to shrink. As it does, the valuation multiples that investors are willing to pay could expand dramatically, moving way closer to what you see for peers in Brazil or Mexico. That multiple expansion is where the truly explosive returns could come from.
And this visualizes the whole idea perfectly. Just look at that valuation gap. A leading Argentinian bank like Galicia trades at a price-to-book ratio of just under 1, while its regional peers trade at a pretty significant premium. The entire bet is that over time, this gap is going to close, providing a massive tailwind for the stock price on top of any earnings growth.
So there you have it. You've got an economy pulling itself back from the brink, a banking sector that's been unshackled and seems poised for explosive growth, and stocks that are trading at a deep discount to their neighbors. The potential is immense, but the risks of political reversal, of currency devaluation, of simple execution, they're just as real. For investors, it all comes down to one final question. Are you willing to bet on Argentina?